Hi, all. This is Dr. J streaming live from Long Island, New York, where the weather is cold but clear. It's a decent day out there, and I'm trying to respond to your requests. I had 3 interesting stocks requested recently. That are not biotech. I'm separating that out as a different category. They are Qualcomm, an oldie but a goodie, a large cap, big chip maker for cell phones. What else? There's Snapchat. Don't ask Dr. J what a Snapchat is. I haven't figured out Facebook yet. I'm a Twitter guy and a stock twit guy. Maybe a LinkedIn guy a little bit, tiny little bit Instagram, but I've never, ever really, I don't have the Snapchat app. So Snapchat, I don't understand it exactly, where things disappear and you take pictures and you send sex stuff or whatever you do. I don't know what the appeal is with Snapchat, but there is an appeal. We're going to look at it from the chart point of view, not the fundamentals so much. And also Fit. Fit is one of those, when I think of Fit, I think of one of those smartwatches that'll give you everything from your steps to heart rate to EKG, tech, med tech, whatever, and beautiful looking. And maybe the new version, I think, is going to have a GPS. So I believe that's what some of the excitement about is rumors of what the next version Fit will look like. And from what I've seen and heard, it's going to look gorgeous. Maybe rival the Apple Watch. So we're going to look at Fit from the fundamentals, not the fundamentals side, but the technical analysis side. We're going to look at IWM because I love the small caps. Dr. J has been shouting at the top of his lungs now for weeks, if not longer, that the next big move will be in small caps. IWM is the ETF that parallels the RUT or the Russell 2000. Okay, so we're going to look, that's basically the broader market, 2,000 stocks, as opposed to SPY, which is the spiders or the 500 stocks from the S&P 500. That parallels that index, or the Qs that parallel the NASDAQ 100, or the diamonds that parallel just 30 stocks that comprise the Dow. So we're going to do a comparison of those 4 ETFs. Dr. J loves IWM. Remember, do your own due diligence. My opinions are strictly my own and do not constitute any investment advice. However, occasionally Dr. J has excellent ideas. Feel free to follow me, but at your own risk. Your job is to differentiate my good ideas from my clunkers. Throw away the clunkers. Get rid of those clunkers. Throw it in the garbage. Go with my good ideas. And would you do me a favor? Let me know which of my ideas are my good ideas so I can go with my good ideas. Does that make any sense? No, I know it doesn't. Tell all your friends about the somewhat quirky Dr. J, who's been giving some amazing, amazing ideas and hasn't been wrong in a century or two. I've been hot as blazes. I just hope I stay that way. I might become, super rich in retirement. Then what do I do with the money in retirement? I'm too old to enjoy it. Not really. I can still think of a few things that money can buy. But what's that song? Money can't buy you love, can't buy you love. But it could buy you a lot of other things. It could buy you, I don't know, it could buy you an electric Tesla SUV. That's not a bad looking car. Does a lot of fun things. Or it could just buy me a souped up Mustang. I don't know. Dr. J loved a Mustang back in the 60s, the Mach 3. Okay, it's a good middle-age crisis car, but I think I'm past the middle-age crisis point. Let's get to the video charts. Of course, be nice to Dr. J, who loves you so much. Show me your love by giving me a thumbs up. Up is this way, down is that way. We don't do down, we do up. There should be a little picture of a thumbs up. That means you like me. Tell me how much you like me. I like to be liked. It's very important to Dr. J that you like me. Also, if you didn't yet subscribe to my channel, which I find it hard to believe that you haven't, please do so. And finally, write comments. Let me know what stocks you want me to chart. Give me comments about anything at all, and I will respond. It could be the stock market. It could be a tip. It could be a request to chart something. It could be a comment on my commentary. It could be a comment on the world situation. Don't ask me what the world situation is because I don't know what it is. Okay, let's get to those video charts before I forget what charts what stocks I'm charting. Probably forgot them already. Let's go there. It's simple as 1, 2, 3, faster than you can say Jackie Robinson. I can get us there. Everybody knows Jackie Robinson, who he was, right? Second baseman for the Brooklyn Dodgers. That's right, you got it. All right, let's go from left to right, beginning with Snap. Okay, Snap closed up 3.41% or 32 cents at 971. It is now right at resistance, as I draw the line right above that. And it's moved nicely from its support at 804. So we now are in a new trading range for Snap, a higher trading range than it's been in for many a month, from let's say back here, 10/4, October 4th, through February 6th. So for a long time, that's October, November, December, January, February, like 4.5 months, it's been trading below this 8 to 975 range. Now I think it's going to trade in that range for a while, then break out of that range to the upside, looking for 1183 as its next resistance point. So do I like Snap? Yes and no. I think it could easily come back down, break out of this little triangle to the downside, retest 804 on any weakness, then come back up and maybe go through the resistance. I don't think we're ready to go through resistance just yet. So again, this is not taking into account any fundamentals. I know there was a good earnings report. That's what caused the jump February 5th. So it beat expectations. On February 6th, it jumped up. But notice it gave back most of its gain. It still had not most of its gain. It finished in a doji. There was a tug of war during the day between buyers and sellers. They called it a draw, but of course, Snap was up sharply from its day before close of 704. So from 7:04, it closed the next day at 8:59. That's a very nice move overnight. Do I think it's going to immediately fill that gap? No, I do not. I think we're going to have this new trading range until it can break to the upside. It could, of course, fill the gap. Do all gaps have to be filled? Of course not. This is what's known as a myth. But many gaps are filled, and traders who believe that are often the cause of filling that gap. They figure it's going to get filled, so somehow or another they sell it, figuring they'll buy it back, or they short it till it reaches that point. Whatever. I don't know what the psychological thing is about filling the gap, but not all gaps get filled. This one may or may not. Let's look at Qualcomm. We have a tiny gap right here. It went down from its low of 53.94 to its high of 53.57. Tiny gap. So that gap, traders think is going to get filled maybe soon as it breaks north out of this ascending triangle. I think it will break north. I agree with that. I'm not worried about the gap. What I am worried about is resistance here at, what is this? Let me see what that number is. The resistance at about 55, 56. That I'm worried about. It has to get through that. If it gets through that 55, 56 resistance, I think it's good for $60. So it's a stodgy old stock with a huge market cap of, I don't know how many billion, 50 billion, something like that. Fundamentals that could move it is a China trade deal, I suppose, with a nice contract from Chinese cell maker. I don't know how to say the name. What is it? Let me see if I remember how to spell it. HUAWEI, something like that. If they get a good big contract, it'll move it a little. And I mean, look at the collapse it had. I mean, it was just unbelievable collapse from $75 over a period of, I don't know how long, let's see. From about September, October, November, December, about 5 months. What a collapse. I just right-clicked by accident, getting rid of the downward trend line. But you saw it. What a downward trend line. It came all the way to 131, the end of January, when it started to move back up. And it's been moving up since, very nicely to its upper and lower trend line, forming a little triangle that it will come out of to the upside. Will it stop at 55.88, or will it keep going to that $60 level? That is the question. I would not feel uncomfortable going long at Qualcomm at this point, the downside being $49. It finally put in what looks like a real low at $49, a base. Took 5 months, but I think we finally bottomed at $49. And I think the market in general will continue strong. That together with rumors or a real China trade deal should send Qualcomm back up to challenge that $60 level. It's going to be a long time before it challenges its $75 high of the year. Okay, so that's Qualcomm. FIT. Also, the thing with Qualcomm, it's not really a swing trade because it's such a slow mover. to get to $60 could take it quite a few months, couple of months. That is not swing trading. That's not long-term investment, but it's not swing trading. Somewhere in between. So, you know, and it's for 10%. So if it takes 3 months to make, well, more than 10%, 53 to 60 is, what is it? Better than 20%. So that's not a bad move, better than 20% for Qualcomm. No, less than 10%. 10.6 would be 10%, 20%. 5.3 would be 56. So it's less than 20%, but up there, 18%. Not a bad move for Qualcomm. And you're risking 5 points or 10%. Not even, yeah, about that, 53 to 49, 4 points. You're risking about 8% on the downside to make 18% on the upside. Even if it takes 3 months to hit that, it's worth the wait for 18%. Better than you get in the bank. Anyway, FIT. I hate lately doing percents in my mind. I've not been that sharp. It troubles me a little bit. But there are other things that trouble me more. Okay, so FIT. Again, I think of those watches when I think of FIT. And I think the next version is going to be a super duper knockout watch. Beautiful colors. It's going to be a compelling watch that many athletes and make-believe athletes alike will want to own. I like FIT. I like the chart. I like the fact that with the 50-day is now crossing the 100-day. And I like the fact that we're now look like finally we're taking out the old high up here of 645. Took that out nicely. We have an ascending trend line that should take us right up to the 780 area. So I like FIT for a swing trade to that 775 with a stop. Oh, I don't know. Let's say if you're looking for 775, you're looking for a buck. You probably want a tighter stop loss. Maybe maybe $6, something like that for a stop loss. You could vary that, maybe the top of this candle. That's 571, in which case you have an even money shot. 571 stop loss, 775 take profit. It's about even money to make a buck, and that buck translates very nicely into about 14% move. Okay, IWM. Beyond that, actually, let me just say one more thing about FIT. If you want to hold this for the long term, if it breaks out of that 775, if it breaks through that resistance, it's going up. It's probably going to go all the way up to the $15, $16 level. The next real resistance, $16.90. So, I mean, on a break of 775, I might jump in myself, because just to see where this thing goes, I think it goes at least back to here, $13 range. So I could see a double from here on FIT. And yet, at the same time, I know there are a lot of people playing this one short, a lot of traders playing this one short. And I guess the reason is, look at this. That's a phenomenal collapse from $50 to $6, actually lower than that. So, I mean, it was a horrible, horrible collapse. And it was going absolutely nowhere for 5 months. And the bottom, of course, was around $4, $4.40. So, I mean, why not? If you think it's had a little pop and you can get back to that 440 level, that's nice little profit. You're risking $1 on the upside. You get out of your short. So, I mean, you could play this either way, depending on your point of view. IWM, I've been pounding the table on this one, and it's been listening to me. IWM is outperforming the other ETFs. The IWM, of course, parallels the Russell 2000. The others that I'm comparing it with is the diamonds paralleling the Dow, the Qs paralleling the NASDAQ 100, the SPYs paralleling the S&P 500. They're all bunched up between 12.7% gain and 13 point something, 5. So over the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, the IWM is well outperforming the other 3 indices, up 19% versus like 13%. That's significant. That's 50% better. So Dr. J has been right on the money so far. Do I think this trend will continue? I do. I think the IWM followed by the Qs, which has been tremendous for over the years, followed by the Dow and S&P, however you want to look at it. I think that will be the order of percentage gain. I think you'll see the best gain in the IWM, followed by the NASDAQ 100, followed by the Qs, followed by the Dow. I think the Dow will actually lag after it makes new all-time highs at 30,000. So it's not going to lag too badly, but it'll lag. So on a cis-boom bar market, from 9 weeks ago, I could see at least a 50% move in the IWM, or more than double what relative move the 19% here, probably 30% or more. It's probably got a lot more juice than that left in it before this thing is over. I wouldn't be surprised if we get a 50% move on the IWM in 2019, not 1919. My mother was born in 1919. No, this is going to move like crazy, in my opinion. All right. That's it for now, because I want to have enough energy to come back to you for later with my biotech special report. It's not too late to send me some biotechnology requests. I have a long list. I'm going to try to get to all of them. If not, maybe I'll break it into 2 parts and do a special biotech 1 and a special biotech 2 tonight and tomorrow morning, perhaps, or tonight and tomorrow night. We will try to include all your requests. So if you have more requests, please, at your chest, tweet me, or better yet, leave a comment at the end of this video, which is coming up now. Also, don't forget to subscribe, hit the G if I remember to put it up there. If not, it's a little button just below on the right-hand side, just below the video. Share with your friends, share on Twitter, share on Facebook, share my link with the world. Let the world know who Dr. J from Long Island, New York is. I want to say shalom, sayonara, arrivederci, au revoir, hasta luego, tutaloo, see ya.